Hello and welcome to this YouTube series where we are talking about gold this time around, which has found mention in various budgets, and this one also continues to be like that. It was during the last budget that the finance minister spoke about appointing IFSCA to regulate the international bullion exchange at the gift city. This budget has brought around clarity about SEBI as a regulator for a domestic bullion exchange as well. This has been an ask, and there have been lots of papers circulated for a bullion exchange in India, whether it has been from the World Gold Council, Niti Aayog, Pahle Foundation. Various associations and agencies also have spoken about a spot exchange, a gold exchange in the Indian markets. When you look at India at this point in time, well, there are there's a lot of fragmentation. There is a lower transparency when you look at the prices. There are quality assurances what the markets is looking forward to right now, and the markets will be a price setter as well. At this point in time, even as India is the second largest consumer and importer of gold, we are still price takers. Whatever happens in the international markets, India just ends about calculating that in the Indian rupees. So that in some sense could be changing when we see a nationalized gold spot exchange here, where all the cities and states and jewelers would be partaking in. Well, a domestic market, as we look at it right now, is also regulated at various levels, from DGFT to Commerce Ministry to Finance Ministry. Because gold has such far-reaching impacts, we see a lot of these various regulators telling us on what needs to be done in sense of gold. Now, with spot exchange coming in and SEBI as a regulator which is set, the markets have taken a sigh of relief and are looking forward to a spot exchange with the expectation that we might see it on ground in the next 6 to 8 months. Well, just to tell you on what will the exchange achieve, it would see a better price discovery. We are perhaps looking at a better value chain from where we stand, price efficiency, liquidity, transparency, and a quality assurance which the Indian markets are still looking for right now, and an organized bullion ecosystem, which is quite a demand at this point in time. Also, when you talk about the stakeholders on who would be part of this exchange, well, right from the banks, which is quite important because they would bring in liquidity and credibility to this. The large, small, mid-sized manufacturers would be a part of this as well. And then refiners in the Indian markets, you would have jewelers, traders, importers, and then some retail participation as well is what the industry is watching out for. I talked to you about the current situation where you have multiple vaults which are spread all over India. There is no one place which would tell you on how much import, which vault, who's buying, what price. So all of that clearly is missing right now, which will be achieved by a nationalized spot exchange here. Well, what it would also achieve is refining facilities, assaying, vaulting, all of that would come under similar umbrella. The logistics arrangements would also be seen, and then of course it is yet to be seen on what would be decided, but various agencies have talked about T+1 in sense of settlement here. Standardization of quality and quantity is something that the markets are looking forward to, and then because of the kind of encouragement or participation that we're talking about, the expectation is that this would really work wonders. A major thing here also is that it would attract all participants in the gold ecosystem, and this would not just be a distribution channel, this would be a place where you are seeing all activities come under one area. We have seen global learnings quite high on this, whether it's about Turkey or China, Singapore, US, UK, where we have seen this work with great elan. So the expectation now is that India would work positive onto this one. So active retail participation is one thing that the markets are looking at, and this would mean buying, selling, investment, all coming under one umbrella. Substitution of investment, of the physical gold versus the gold linked instruments. So it's not just going to be about physical buying and selling, but if you're looking to invest, this would come under this also. A greater integration of all other segments of financial markets through gold leasing, lending, gold loans, which also happen right now, perhaps would be one thing that would come under spot exchange also. So whatever it has to do with gold would perhaps be achieved by this. Remember, government has been talking about a gold board, a comprehensive gold policy, gold as an asset class, gold as a monetization asset. So while we are working towards that right now, this would clearly put us a step forward as and when this is put forth there. The other thing is, this could also act as a channel for recycling by working through accredited refineries, large buyer seller. It is also going to be a platform for that, and this would be real-time buying and selling. So it is not a forward or a future. So markets would have a price discovery mechanism which is happening there and then, and a price setting will happen in India, which we have been waiting for decades until now. Of course, there would be KYC instruments, there would be a lot of requirements in that sense, and that would give you that much transparency as well. Advantages that the bullion exchange would bring forth is that it would become one of the global bullion price setters here. Physical gold trading in India will now be regulated, which markets, if you go out to buy gold or if you want to sell your gold, you do not know on what city and state is a faraway thing, but in the same lane as well, jewelers are quoting different prices. So once you have an exchange, you would know exactly what the price is going on, and this would be a national exchange. So all cities and states would have a similar price uniformity getting there. This would also help in reduction of gold imports, because when you are recycling, taking metal loans, you're buying and selling, you're using it as a platform. So the government in last many budgets, the reason that you have such high import duty is because the gold imports have been very high. So with the gold exchange coming on, there would be reduction in gold imports, there would be remonetization, and hence a reduction in current account deficit, something that the government wants to do also. Reduction in price disparities is something I have already spoken to you about. So it's going to be a nationwide electronic exchange, reselling, buying, transparency, standardization, interbank lending of gold. The expectations are huge, and so is the scope of it. So while we have this going right now, the expectation is that in the next couple of months, you will have various agencies coming forth and start giving their reviews. There is a framework which is already ready here. So, and the markets are looking at it, with great expectations at this point.